Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings, this is the video research from the ForexPeaceArmy.com. We will continue to talk about euro currency, especially because the market now shows some solid price action to the upside. And let's start from our yesterday's trading plan that we has formed yesterday. So as you remember, we said that that is the strong area of resistance, was this conference daily resistance. Daily overbought 137.55 was for yesterday's trading session, and weekly pivot point, monthly pivot point. So from that perspective, also by the way, on intraday chart we said that this is the potential target of the Gartley's butterfly sell 127. Also this is some fib extensions has the target in that area, so that was the really solid area of resistance. And from the probability point of view, this area is absolutely perfect for the entering on the short side of the market and watching for the sell signals around that area. But the trading is just a probability game, so in the 80% of cases market will turn in such circumstances, but in 20% market negate the strong area of resistance and accelerates further despite or no at all thoughts that we include in that area. So that's resistance, that is monthly pivot, targets and so on. So sometimes and very often market becomes wiser than us. So and market continue move to the upside right to the 1618 extension of this butterfly and piercing this overbought area. So just force the market and pierce overbought area to reaching that 1618 extension of the butterfly, although we said that hardly will happen, but this has happened. Well, what we could do during today's trading session? For the bullish traders, if you are bulls, well, for you the situation hasn't changed drastically, since market now stands at overbought, and to buy at overbought is additional risk to enter and jumping in the trade. So if you are a bullish trader, you need to wait the retracement from that swing to the upside. Also, we could say now that this is probably some short-term shift in the momentum, since this swing to the upside, as you can see, is greater than previous swing to the downside. That is very common for the shifting of the momentum of the market, when the swing to the upside is greater than the swing to the downside. Also, we see the strength of the bull move on the euro, since market has struggled with the overbought area, erased this confidence resistance area without any respect, almost without any respect. We see some shallow pullback just was from that area. Market accelerates to the upside. So probably now we see something like that. So you can see market creeping with the oversold, so hitting, flat, hitting, again hitting, and only after that shows some retracement. So here could be something like that. The market will be creep with the overbought, and then somewhere it will show some retracement to the downside. Well, but we, based on the daily time frame, we can't say where it could happen. So currently we see that market at resistance, daily overbought again very close to the market. You can see for the today trading session that is 138.66, and also near the next fib resistance 138.43. So that is no more the fib resistance area, no more that levels were erased by the market. So market could retest confidence resistance from the other side, since it has been not be respected by the market. And very often when market erased some significant area of resistance, it could return and retest it. But currently on the daily time frame we do not see any signs of that. We just see 138.66 overbought for the today trading session and 138.43 next area of resistance. Now let's shift to the 4-hour time frame. What do we see here? Well, the red line on the chart is the MACD predictor, Jordan-Napoli indicator. It's almost the same as the simple MACD. It's the derivative indicator from the MACD. When the market stands above the red line, the trend is bullish by MACD. When market stands below the red line, the trend is bearish. So what do we see? Let's start from these extensions that we have discussed during the previous week. A, B, C bottom, 100% shallow retracement, 1618. Market has hit 138.11, the target of that ABCD pattern. Okay, the more recent ABC, A, B, C bottom, market hit 1618. 100% extension stands above that level of resistance, above the market, and precisely in the area of daily overbought. And currently I suggest that probably market should hit it, since what we see? We see strong thrusting bar right to the 618 extension target. That is a bullish sign. Also we see currently some kind of this bullish stop grabber is forming on the 4-hour time frame. If market will close as it is around that area above this red line, this will tell us that probably market will show some move to the upside and take out that highs, and very probable it could reach the 100% extension. So that is daily overbought, that is an agreement on the daily time frame. So that's solid area of resistance. So if you are bullish, this is very risky to enter currently on the long side of the market. Okay, so you need some pullback to the downside from that swing to the upside to enter on the long side. If you are bearish, well, in that case probably you should watch for the sell signals in that area, try to enter on the short side of the market, but I think that you should place your stop above that area. So that is will be above the agreement, above the 100% extension from that recent ABCD, and above the daily overbought. Also, yesterday's price action has shown us that this is not the 100% warranty that market will not trigger your stop if you even place it above the overbought. But anyway, this will be much safer than you will place stop just above that high. Since this seems logical, to placing stop above that area seems more safer and logical. So on the hourly time frame, what do we see? Our butterfly. Okay, this is huge strong acceleration right to the 1618 extension from that swing, from that high to that low. That is 1618 target of the butterfly. We have suggested that market should reach just that area, since that was the 127 extension of that butterfly. Also you can see that market has hit some kind of constellation of different targets, so that is extension of the butterfly, and also that is 1618 extension from that A, B, C bottom. Market accelerates right one to the 1618. In general, this kind of thrusts that happened right to the target of the butterfly tells add probability that butterfly could fail, because such huge thrusting bars right to the target of the butterfly tells that probably the probability of failing of the butterfly is greater than just when the market is showing gradual move to the upside. That's a bit worrying, and that's why I suggest that probably market still could reach that target before some kind of reversal or something. Okay, so be extra careful. Although you can see that on the daily time frame, on the hourly time frame, we see that MACD turned bearish. Okay, also this is some kind of head and shoulders pattern is forming, but be extra careful. If you even will try to take that signal and enter on the short side of the market, it's better to place stop above that level, somewhere around 138.85 or somewhere above that level. Since this is an agreement, this is just give you additional protection of your potential position. Okay, in general I suggest that probably we could try to speak that the retracement has started when the market will move below this point, below this previous extreme on the 4-hour time frame. It will look more clear. Okay, if market will erase that thrusting move to the upside, it will show some significant move to the downside and close below that point, below that 137 level. Okay, then probably we could say that the retracement has started. Until that, be extra careful with the short positions. The market is very aggressive to the upside. This thrusting bars to the upside tells me that we could see some continuation. Be careful. Also, I forgot to say, on the daily time frame, we see that potential target of this move to the upside, that nearest target is right here, because this is the previous lows on the daily time frame. This is the fib resistance from the whole swing to the downside, and also that is very close to the monthly pivot resistance 1. Okay, when the retracement stands on the monthly chart, okay, on the retracement during the huge down move, the resistance, period resistances, should hold this retracement. That is very common rule for the market price action. Okay, so that is an area where the market is gravitates currently. This is 140.20, 140.76 right here. Okay, but they are a bit extended since they both of them are beyond the level of daily overbought. So probably market still could show some retracement first before it will continue. Maybe this will be some kind of a BCD to the upside. So that's my current view on the situation. Be careful with the short position, although market probably could start show some retracement nearer term. Okay, if you are still bullish, it's better to wait for some significant retracement to the downside, since market stands near level of resistance overbought. It's not very good idea to enter long currently right from that area.